Do birds suddenly appear every time you are near? Just like me, they long to be close to you.
Hey everybody, this is Dr. Willie Jolley, and I got my beautiful bride.
This is Dee.
And we're here. We got a special show for you tonight. Yeah, the question is the marriage penalty still around? Yeah, it's alive and kicking. You need to know about it. And we got a special guest tonight. And once a month, we do a special edition that's an hour long, and this is the night. So y'all came in on the right night, or you're tuning in on the right night, or you're catching in on the right now. Now, we're assuming everybody who joined in knows who we are. Well, for those who don't know,
this is Willie.
I'm Dr. Willie Jolley.
And this is Dee.
And that's Dee Taylor-Jolley. We're the authors of the book, Make Love, Make Money, Make It Last, 10 Secrets to Shape a Great Marriage. And we are grateful for all of you who are using this as a tool to help grow and enhance your marriage.
So money, love, and last.
Money, love, and make it last.
Okay. He's going to talk about the money.
Let's get it on.
So
we got special guests.
About our guest tonight.
We got a great guest.
That I invited.
Oh, yes, you did.
Might know I invited.
I know him because I've been on his radio show many times. And it's always a pleasure and a joy to be on. He has a show that airs in multiple markets. I'm going to let you introduce him. Why don't you introduce our dear friend Ed Fulbright?
You're going to let me do it.
You go ahead.
Okay. Edward D. Fulbright, and he's a CPA, and you know, I love all things related to counting the money.
The money, baby.
Counting the money.
Yes, you do.
Okay, so
let me tell you all about Ed Fulbright, folks, and then I'm going to let you fill it in, okay? Now, Ed Fulbright is from North Carolina. He grew up in Durham, North Carolina, and now has a very, very popular weekly show on radio in Durham, but it also airs a few other places. While in college, he served as an accounting intern at Chase Manhattan Bank in New York City. Whoop, whoop. And then Chase Manhattan Insurance in Chicago and Ernst & Young in Maryland. After graduating from college with a degree in accounting from the School of Business of Industry at Florida A&M University, he served as a senior auditor for Ernst & Young in Atlanta, where he managed many diverse audits from cotton mills to nonprofits to mutual funds. He then served as a financial analyst at IBM before founding his own companies.
That he did in 1986. I remember that.
All right. He is the current chairman, chief executive officer of 3 of the operating enterprises he founded: Fulbright and Fulbright CPA, Fulbright Financial Consulting, and Fulbright Knowledge Alliances. In addition to being actively engaged in his firms, he is the host and producer of the syndicated weekly financial radio show, Mastering Your Money, which I've been on, and I've sent a lot of great friends like my friend Kevin Hicks. Many of them say, this guy is awesome. And he contributes regularly to articles, books, conducts lectures, seminars, and serves on boards, including a national credit union. He is a certified Public Accountant, CPA. He also holds a Professional Financial Specialist, PFS, designation, and Chartered Global Management Accountant, CGMA certification, in addition to being a registered investment advisor. He is responsible for client development, fee-only financial planning, and investment advisory as well.
So fee only, you can trust him.
You can trust him, but he ain't trying to get you in no proprietary stuff. But he is our friend. He is from Durham, North Carolina. He's a big baller, shot caller in the financial industry.
And I want to say, you need to summarize, because this is his really business season. And we are very, very thankful that he was able to.
That's right. This is tax season, so he's busy.
This is tax season.
Oh, yeah.
Yeah.
And tax season, the money. And I've been reading a lot about what is this marriage penalty. And I said to Willie, we need to talk about that.
Right. But before we get one more thing I want to ask, he has a beautiful bride named Genevia, and she would be on, but she in bed. She go to bed at 9 o'clock. She don't be fooling around. 9 o'clock, she out. She call it done. She call it done. Now, how long y'all been married, Ed?
33 years.
Wow. Okay. So y'all been around like we've been around quite a while. All right.
We've been around for a long time, and she puts up with me, and I know my limitations. So
all right.
When Dee said 9 o'clock, I said, well, Genevia's out.
He already knew. He didn't even need to ask. He knew what the deal was out.
Oh, I asked her, but I just wanted to make sure that Dee knew that, hey, that's around her bedtime and she's cooling and chilling and relaxing and getting ready for the next day.
I got it.
Amen. Ed Fulbright, CPA, radio show, syndicated radio show host, my dear friend, who I've been on the show. By the way, where did the show air? When can people hear it? And it's also on podcasts or
I got that.
Yeah, it's in podcasts. You can go to masteringyourmoney.com and you can pick up, a lot of episodes, probably at least the last 5 years. And if you go to the blog, you can catch a lot of episodes that it's a little bit, the blog is a little bit more picturesque than the going straight to mastering your money.
Okay, very good. Okay, so Ed, we've talked about a little bit about you and your beautiful bride. We're in tax season. We know that marriages break up for one of three reasons. Typically, there are three big boulders that break up marriages: sex, money, communication. And we write about those in the book and how to help people fix those situations. We even have a series on repairing your marriage when people are struggling that we offer at jolleymarriage.com/events. So we encourage people to go get that. It's a great series that talks about communications. We talks about sex, talks about money, it talks about family matters and blended families. But we're talking specifically about money, money. Because just recently I saw that most couples will, if they don't break up about money, but if they have money issue, it's gonna always be a problem. And you see that, and you've been around a while. You feel,
I've seen that a lot. In fact, I've seen where one couple, the wife made more money. It was beneficial for them to file jointly, but the husband decided that since the wife was trying to get him to pay half the taxes, he ended up, he said, file me separate. So, he didn't want to pay her taxes and didn't want to give her half the money. So she ended up having to pay more, like maybe a couple of $1,000s more, because they couldn't agree on filing jointly.
And how'd that work out for their marriage?
It didn't last too much longer. I knew
where that was going. I saw that coming like a slow left hook. When you said that, I said, this ain't gonna work well.
No, it blew my mind because I thought that they had a very strong relationship, and all of a sudden she was trying to convince him that he needed to pay like extra $1,000, and they owed the money because she made more money than him. So, sometimes you're just better off just going to pay the tax bill and not argue about it.
What did it cost in terms of let's think about it. What it costs in terms of the divorce, in terms of the separation of all the assets?
And I would say that the problem was not really the money. There was something else going on in terms of who's in control of the relationship or.
Well, that's you make an assumption. You making an assumption.
Yes,
you don't have all we know is what he just told
assumption.
us, and what he just told us is that the husband did not want to file jointly because it would cost.
He
didn't want to pay any.
Share paying.
All right, so here's the problem. Here's the real problem: is that he saw them as two entities rather than a merger, as we say in chapter number 9, Money Matters, that a marriage is not just a love relationship, it's a merger of two business entities who come together, and that merger must work together. Am I right, Ed?
Yes, you're absolutely correct. Okay. That it shouldn't be an argument over money, or the money shouldn't be the big thing, but y'all should be able to agree on how it's being dispersed. But unfortunately, in this situation, over a mere $2,000, it ended up breaking up. But obviously, the marriage itself had a lot of problems that I was unaware of.
Right.
And I caution always after that experience, I caution the person who's making the bigger amount of money, just pay the taxes. Don't try to get cute and try to get your spouse to pay a portion of it.
Look,
And usually that works out a lot better. And people, and usually it's men, and they usually say, okay, yep, I got you. And sometimes women are making more, and we have that discussion. And I said, whatever you do, don't try to make your husband pay the bill.
okay, Terrence
But
is.
if you're
Terrence is on hold. Let me see. Terrence said, where's the hidden deduction? Can you help a brother out? Or one can be a thief and a liar. You got to protect yourself. Rejection is for your protection. Well, that's.
I'm not sure. Terrence, I'm like shocked at him.
Terrence,
Terrence,
she wants you to work together, Terrence.
but what is the marriage penalty legally? Doesn't that refer to that sometimes you have to, it might be cost effective to file separately if each person is over a certain income bracket, right?
Well, why don't you tell us?
Okay.
Laughing.
When you are married, you have one of two choices. If you've been living together the full year, then you can only file jointly or married filing separately. Now, there are a few exceptions, but you have to be living apart to make that work. So that means that you're kind of on the outs with the family members or with your spouse. And so you're taking, you're basically headed for divorce anyway. So basically, in fact, you have a rate table. I gave you a table. I don't know if you can show that, but it just shows how the single
stream. Okay.
Right. So if you look over in the left-hand column, you can see that married filing separately is basically half of the married filing jointly. So if you happen to be a spouse that makes more money than the other spouse, then it is to the one earning more money it's to their benefit to probably not worry about trying to split the taxes unless they have all their money is held jointly. And that's kind of what I find is what happens with a lot of people. They have problems with owing taxes, and the spouse ends up having problems. Now, one of the things that could also be a problem is if one of the spouses has a business. And if they have a business and maybe you have a feeling that the spouse will maybe is a little bit too aggressive with their deductions, they may want to file separately so that they don't have to have the responsibility for paying the back taxes. Because if you file jointly and let's say they disallow a lot of deductions, the spouse does not benefit, or the spouse will owe money. And if the other spouse decides that they don't want to pay, you could be stuck with the entire tax bill, and you have to spend a lot of money to try to get it unwound, and it's a real painful process.
All right, so my friend Clarence is over here saying something. He said every wife should make more money than their husband in his world. It makes her look more beautiful. That's Terrence.
Well,
now he loves to say that the money will make it right. So let's see. We've got a few tables here, but I want to go back to something that
Right.
I'm gonna come back to your.
Hi, Amy from Nashville.
So here's what I want to talk about.
Yes.
That you said a couple of things. We talk about in our book that money is critically important to the success of marriage, but also how you manage the money.
How you view money.
Okay, how you
And
view.
money personalities can be helpful or destructive to the relationship.
Yeah, but you jumped on. I haven't finished my thought.
I'm
Okay.
so sorry.
Let me finish. Let me finish.
I'm so sorry.
And that here's the thought is that the successful marriages don't see it as my money, your money, his
Right.
money, her money. They see it as our money. And they realize that we in this to win it. So what we're going to do is we're going to figure out one of them might make much more than the other. But
Yes.
when you look at it over the long term, if you're working together on some goals and dreams and objectives, then everything changes because then you start to work together toward those goals and dreams. Thank you, Wayne, for coming from Philly. We got folks from Oklahoma. We got folks coming from Nashville. And we got people all over the world now joining us. So we're talking about money with our tax guy because this tax season coming up in about
So we
4
are
weeks.
thankful that
Well-
Ed took time out of his crazy schedule to do this with us this evening. So let's get back to if we're on the same page in terms of us working together overall, then doesn't it make sense to look at, okay, so you're making $500,000 and I'm making $30,000.
Mhm.
Does it, which works, does it make sense to say, let's do the taxes? Does it make sense for us to do it jointly? Or does it make sense in terms of savings for us to do it individually? If you do it both ways and then decide, looking at the numbers,
So-
which way works?
So Ed,
Because you're both benefiting.
do you give people the option to say if you did it jointly, it would be X, and if
Yes.
you did it separately, it would be Y? Do you do
Yes.
that? Give them the
Yes.
option.
Yes. My system or the tax program that I use has 2 sheets of paper in there that breaks down the income by person and shows you how much you're saving by filing jointly or what you could benefit from if you need to file separately.
Mm.
And
Excellent.
it sometimes you can be surprised how that works out because one time I had a spouse that earned less money, but because they were at a certain income point, they ended up saving more money by them filing separately. And so in that case, it made sense. I had to check out the numbers 2 or 3 times, but because it made sense, it worked out well. You know, it's just like a couple of times, like last year when they had the stimulus money, because there was a different amount of income, the wife was better off filing separately because they got part of the $1,500 deposit, or at least it was a $1,500 difference, and that made sense. Otherwise, they normally file jointly, and usually their numbers work out really, really well. But sometimes it does make sense because I've had people, I mean, literally, I had one couple that they filed separately because they were going to save $5,000 or $6,000 because and they both made really, really good money. It just turned out because of all the deductions that his wife would get, she benefited more that they needed to file separately.
Okay,
So,
we got a question from Brenda
yes.
Colson. Is every state the same for married couples?
No,
No. Okay.
not every state, because there are about 8 states that have no income taxes.
And what are they?
Oh, you're going to get me in trouble here. You're talking about Texas, Tennessee, Washington State. Oh gosh, you're gonna get
Or
me
is
in real
Florida
trouble.
one of them?
Florida, yeah,
Yeah,
Florida's one of them.
yeah, yeah. So
And
so in those states, what happens?
There's no state tax. Is that what you're
there's
saying?
no state tax. But let me tell you, every state gets their money.
They're gonna get it.
So they're going to get it one way or another. Like in Texas, you will find that they collect very, very large property taxes
Ah,
if you're in Texas. So, like where you're in Maryland or DC, you may only be paying, I don't know what price house you're in, but let's just say it's a $500,000 house. You might be paying taxes of maybe 5,000 or 6,000.
Right.
In
yeah.
Texas, that's probably close to 12. And
Mm.
so, it almost becomes about the same as income taxes. In Florida, usually their sales tax and their commercial business enterprises are much higher than they are for in other states.
Okay,
And so
so Brenda, that answers the question. Now, we got a little comic relief. Terrence said when Dee said that the wife makes $500,000, he said I fell on the floor. That's our comic relief from our friend Terrence. Again, for those who are just joining us, we wanted to say you might just be tuning in. I'm Dr. Willie and Dee Taylor-Jolley. We're the authors of the book Make Love, Make Money, Make It Last, 10 Secrets to Shape a Great Marriage. We talk about in the book that there are 3 boulders that break up marriages: sex, money, communication. And communication is the common denominator between them. But if you don't deal with communication and deal with your money well, you don't have a system for dealing with your money, there are going to be problems. Ed has already showed one couple.
And it is
Ed Fulbright, by the way, for those who are joining us. Ed Fulbright is a syndicated radio program host of Managing Your Money. He is
mastering your money.
Mastering Your Money. Thank you, Ed. Mastering Your Money. And I've been on a number of times. When you go to his website, Mastering Your Money, you will be able to see some of the interviews I've done over the years with him. We usually do it at the beginning of every year, and we've been doing that for years. And I'm very proud that my music is his theme song, or has been over the years. So that's good.
Yes.
Yeah. So we've got a relationship now. And by the way, y'all can hear my music at winwithwillie.com. Winwithwillie.com. Check out the music. Now, we talk about these three boulders: sex, money, and communication. And money is one that consistently comes up. And it's particularly, we're seeing more and more people who are struggling with money due to the fact that it's coming around tax time.
Which really means there was a money issue beforehand.
Okay.
But the tax season just brings it to the fore.
It's like a pimple.
Yes. Ooh. That's ugly.
Well, most of them are looking to get refunds, and what happens is that they find out at tax time that somebody decided that they were going to increase their exemptions, and so they had less withheld. Or it could be the fault of the employer, because they didn't make all the adjustments. We found when I guess it was 2018, they made a tax adjustment, lowered the income taxes, and they did something funky to the rate tables. I found more people owing that year because they didn't have enough withheld. They changed employers. They just started withholding less. And I guess people were real happy during the year, but when it came tax time, you had to pay up.
Gotta pay.
You know what? But there are 2 schools of thought, right?
Yes.
One is that you withhold just enough so that you end up being zero.
Yes.
Getting a return. Or
that's beautiful.
Is that which one do you subscribe to? Or that you have the government withhold, which means they're getting the interest and the benefit of the money, and then you get it back in a lump sum. Which one?
Sure. I prefer that you have a refund of less than $400 or $500. I figure if you only owe, or you have a refund of 500 or you owe 500, I think most people can handle that. The problem is when you owe $10,000 or you owe something that is beyond your ability to pay. That is what concerns me, and that's what becomes the big challenge for most couples that are dealing with a variety of income opportunities.
Huh. Okay,
That's a very nice way to say it.
Okay, now one more thing. You mentioned that,
Yes.
that many people, they take all of these deductions and they keep more money on the front side. I mean, they keep less money on the front side, but then they get a return, a tax return, a big lump sum, which they typically take on a vacation, or they look at it as a a windfall.
And Willie, I think that's the worst way for you to save for a vacation is to let the federal government hold your money.
Use your money. That's right.
Use your money, yes, because
Right.
you're basically helping them to pay for the deficit.
Right.
The point that I want to make, or why I like to keep the refund or owing down to $500, is most people can deal with $500.
Mm-hmm.
That
Right.
doesn't become a big argument in the family. And they, I like to try to keep things simple, because what happens is that they usually try to get me involved with it. And I'm like, no, this is what it is. It can't be changed. The only thing you can do is either you can decide to file merit filing separately, or you can pay it together and take care of it jointly. And usually we can come to an agreement, but I like people to understand the liability that they're taking on and what challenges that they may have, that they need to be aware of those things.
Right. So I want to say to everybody, now Terrence asked, you can also file an extension. Is that correct?
Yes, you can file an extension, but technically you're supposed to pay what you owe at that time, because the penalties and interest starts on this year it's April 18th. So any date beyond April 18th, even though you may have gotten an extension, they are going to try to collect that come October 15th.
Wow.
And so I want everybody to understand that the extension is for your ability to file, not your ability to pay.
Okay, so let's say I want to talk to people for a moment about financial literacy. Just a moment.
Yes.
Yeah, let me just say it because it's on my mind. I'm finishing my book, Rich is Good, Wealthy is Better. And when I finish that, Ed, I got to be on your show, because this is going to be a profound book. You're
just let me know when it's ready.
All right, I got to be on your show. But I talk in this about the fact that one of the things, the key to success in financial dealing is not just getting a lot of money, being rich, having a lot of money, is how the money is generated. And that is what you own, what you are able to let the money work for you. So when you take this big tax return and you get this big lump sum, and then you spend it on a vacation or a new car or some new clothes, you have defeated the principle of creating wealth. Oh yeah, you got rich, but you didn't get wealthy unless you took that money and bought something that could generate more money, i.e. a piece of property or some stocks or some bonds or some investment properties. You've got to be wise about that money, or it becomes just another money going out the window. Am I right?
That's right.
I know you want.
Okay, some specific questions. When should you review your withholdings? Okay.
Every year.
Job, your increase in salary, you need to review your withholdings every year, because tax laws, tax rules, or the percentages change. I don't think most people do that.
No, I don't think so. We're getting so many people saying this is excellent, 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 excellent. So thank you.
Karen said it sounds like it's about discipline,
Yeah.
but it's kind of like you also need a checklist. This Ed's key
Yes.
financial data sheet.
Oh, by the way,
is
it
good.
possible for some place where people?
Yes, they can go to the Moneyful website, and it's right on the front page, and they can get the 2022 tax rates, or it's basically a financial key facts. And then later in the year, we'll have the 2023 up later this year.
That's at masteringyourmoney.com.
Go to moneyful.com, MONEYFUL.com.
So
Money-
MONEYFUL.com.
All right, so you
So
got.
it's a good financial
Let's make sure.
overview.
Let's make sure people get this, because we got to make sure we say it over again. So there are two websites you can go to: masteringyourmoney.com to hear some of the shows from his radio show, and then his website is moneyful.com. Money FUL 1L.com for Ed Fulbright. And also, Ed, we want to
Yes.
make sure people know that they can hire you even if they don't live in North Carolina. Am I right?
That's right. We do quite a few states that aren't North Carolina based. We got clients in Texas, Tennessee, Washington State, California. You know, we have them all over the country. Actually, sometimes they're all over the world, because
Wow.
we have few that are U.S. citizens in Europe.
Mhm.
We don't do European taxes, but we do. We know we're very familiar with working with foreign income earning or exclusions, and we can help clients basically save money on their taxes.
Great.
But you've got to be two things you got to do. You got to be willing to listen, and you got to be willing to take action.
All right. So you're willing to listen to wise advice, and then you got to act on it.
I was saying also to tell the truth.
Tell the truth.
Tell the
Stop-
Well, that's probably number one. You got to tell me the truth, and then we got to figure out what's the best way to handle that. And it doesn't make any sense. I mean, I've seen people, they basically lied about their income. They ended up saving $50,000 in taxes, but they got about $75,000 in interest and penalties
Wow.
and taxes that they had to pay back when the government got them.
Wow.
Now, in today's day and age, most of your income is verifiable unless you are like an all cash business.
And that
And-
becomes suspicious because what is it? Any transaction over $10,000,
Yeah.
right?
And that's exactly how they got this client that basically withdrew $50,000 out of his account to basically put a down payment on this new house he wanted to buy. And all of a sudden, the government contacted him like maybe a year or two after he put the down payment. And they were like, how did you get this money? How did you do all these things? And it ended up being a pretty expensive proposition. And so,
Was he hiding money? Is that what you're saying?
yeah, he had a source of money that was, essentially he basically had unreported income. And so
the government don't like that, do they?
no, they don't like that. And to be frank with you, most of the time it's not worth the effort and the pain that you have to go through, because he had to basically remortgage his house in order to pay off the taxes.
Wow.
And it ended up being more than what he would have owed if he had been honest about it. And, the one thing that I want people to understand is that there's so many deductions that are out there that you can take if your cash flow is right. Now, if you spend every dime, there's not a whole lot that can be done for you to save your taxes. But if you live on a reasonable income, and if you are willing to pay yourself first, you can
Ah,
take advantage. See, there are
Okay,
excellent opportunities.
explain that what you mean, because some people don't know what that
pay
means.
yourself
Tell what that
first.
means. That's what we want
Yeah,
to go
pay
ahead.
yourself first means you're putting away money for your future. And usually that's anywhere from 10 to 20% of your income. And
10 to
guess what?
20%
If you're self-employed, you can put that into a retirement account and that becomes a deduction for you. You know, if you have a big propensity to save money, we can find you bigger tax shelters to shelter that money so that you're able to avoid taxes. There are other things that are out there that if you're not using all the money, like let's just use the example of you selling a, a building. The building, let's say you have a cost basis of $500,000, you sell it for $1 million. That's a $500,000 that you make out of that. If you're willing to reinvest that money, or if you're willing to just, let's say, reinvest the profit and you keep what the cost basis is, there are instruments out there that can help you to keep making more money. And that's the beautiful thing that happens on that, because sometimes we educate the client on what all the opportunities are. They may have a big capital gain. Let's just say it's 200 or 300,000. But if they're willing to put the principal to work or take the gain and use that, there are opportunities out there, especially if you can leave it long term.
What is
Now,
long term?
long term, anywhere from 5 to 10 years. Um, there are a lot of things, especially if they're selling real estate. You have several options that are available to you that you can take advantage of.
All right, I
And
got a
it's
couple questions.
go
We
ahead.
don't want to this one. All my children are grown, and I didn't have taxes taken out for the year of 2022. Is that correct?
Is that the best? I think what he's saying is that the best thing he should have done. If the kids are going, he doesn't have any kids, no deduction. He didn't take any taxes out. Is that the best thing he should have done? I think.
Probably not.
Oh,
It depends on his level of income.
okay.
Everything depends on the level of income, especially for people who may have Social Security. If
Mhm.
all your income is Social Security, then you may not owe any taxes at all. So you may not have anything to worry about. But if you have a lot of income from other sources, then that probably wasn't the best idea.
Okay.
So that's why you need a CPA.
CPA. Okay.
Yes.
Probably eligible.
So, you had a question earlier coming in from we were coming in. You said you're going to ask them the difference between a
I said,
bookkeeper and a CPA.
what's the difference in a bookkeeper versus a CPA? And the tax preparers that come out of the woodwork this time of year.
Sure. All right. The first thing is that a CPA typically has to have 40 hours of every year for education. So CPAs are typically have more training. They have to have a college degree, and they're constantly keeping up with the new tax laws. The tax preparers basically don't have to do that. They learn a little bit A lot of them are getting EAs and things of that, which they do have to do some training, but their requirements are maybe 15 hours versus CPA has to do 40 hours.
So that's why you're certified.
That's right.
Okay,
That's
now
right.
let's talk about this marriage thing. Okay,
Yes.
please remind people what a marriage penalty is that we've talked about. I want to make sure they're clear. We say the
For
marriage
those who are coming
penalty.
in the second half.
Yes.
Right, marriage
Yes.
penalty is liable. Well, please remind people what that is.
The marriage penalty is the extra tax that somebody will pay if they file marriage filing separately.
Okay.
So if you have somebody that, like, one person makes 50,000, the other person makes 100, together they may not owe any taxes, but separately they may owe an extra $1,500, $2,000, those things. Now, one of the things that's always bothered me about Congress, because they always like to talk about the sanctity of marriage, is why don't they make it beneficial for you to be married?
Hmm.
You know, the rates between the marriage penalty and the single rate is a lot lower. You can pay less taxes staying single, and that's why you see a lot of people cohabitating versus paying taxes being joint.
Okay, so you see this every year. How
Yes.
many you gave the for those who are joining us late? Terrence did have a question. Is a trust fund a tax shelter? Putting things into a trust
Depends on what type of trust it is. If it's a living revocable trust, no.
Okay.
If it is a charitable trust, possibly yes. There are a lot of different trusts out there, so you have to be careful, and you need to make sure you're understanding what type of trust it is, and make sure that you're going to get what the real benefit is.
Wow. Okay. Let's
Go
talk.
ahead.
I want to talk about these
Different
marriage
types of
folks. So
trust.
marriage folks
Yes.
be fighting and tax time. They sneaking around. One of the things we tell married people in our book, there are 3 types of systems for handling your money in marriage. We want to make sure people understand, because we've shared this with so many couples. It has helped them, has set them free. We've never had an argument about money.
Over money. Good.
Ever. We never, because we got a system when we first got married.
Because he made all the money.
Well, I wasn't making all the
I
money.
know. I was making a point that you were
we
making
making-
all the money, and I'm keeping and I'm taking all the money from him.
Is that a joke? Sometimes I know when she's trying to be funny. Anyway, look, three systems. There's the 1-pot system, 2-pot system, 3-pot system. Won't go into it now because y'all got to buy the book if you haven't gotten it. Go get the book, JolleyMarriage.com. Get 2 copies, one for each of you to read. But here's the bottom line. The 1-pot is all the money goes in 1 pot. 2nd pot is you split the bills. And then the 3-pot is that you have 3 accounts. His, hers, and ours. Okay? Now, very important.
But you got to know what's going on.
Here's where I'm going.
Okay.
Some of the people we've learned have a problem because they aren't honest about all their money with their spouse.
That's a trust issue. That goes cycles right back to the beginning.
Oh, that's a big trust issue.
Funny.
Because when we were having the conversation, I told you about the client that was willing to file marriage filing separately because his spouse asked too much about where the money on the returns were coming from. And
that was the one we were talking about where he had a previous marriage.
Yes, he had a previous marriage. He had kids, and he knew that she favored his current kids from his current marriage and wanted to direct all the money to his to their current kids. And he didn't like answering a lot of questions. He gave her all the money she could ever need, buy her house, pay for the house, whatever was needed, but he just didn't want to answer questions about his money because he had multiple income sources, all of them legal. He would talk about them, but he just didn't want to answer, and he took care of her in depth. He made sure she was well taken care of.
But here's the problem. Here's the problem when
Yes.
your spouse does not know about your money. When you die,
But she was
there are two problems here. One was she didn't want him to have the relationship with his former kids like he had with his present kids. That's one problem.
That's the issue.
Well, that's no problem. One problem.
Because you marry everybody.
Right. Second problem
You
is,
marry everybody.
but second problem, we've had this come up a number of times. A husband who takes care of all the bills, the wife doesn't know where the money is, doesn't care because she's been taken care of, and he died.
Right.
And he
Don't
died,
know where the money
and she
is.
don't know where the money is, and it's a big hot mess.
Name not on those documents.
That's right. That's right. And so
Well, that could be a major problem.
we've had it come up a number of times. And then one more
So
thing.
what do you do about that?
Okay, one more thing. Are you love?
No.
Well,
Are you trustworthy?
Are you beneficiary worthy?
Right.
Beneficiary love worthy, which says, and we got that term from another situation.
We were on the show, and this guy said the partner was not a beneficiary on the life insurance when
or the house
or the house
or the deed.
Oh,
when
wow.
they were living together for years, and when
Yes.
she died, her daughter was the beneficiary, came and put him out of everything,
Oh,
put
wow.
him out, took all the money, and he'd been paying the mortgage, but his name wasn't on the mortgage. So
Yep.
little things, communication.
Yep.
Okay, we only got a few more minutes, Ed. Tell us the things that married couples need to be thinking about as they prepare for their taxes so that they don't break up. We want to keep them together.
Yes. Well, first of all, you need to be truthful about where your income's coming from and what type of deductions that you're trying to generate. I think both couples should interface with the tax preparer, CPA, whatever the person's designation is, because if one person handles the taxes, you can be left in an awkward position if something starts to happen.
Right.
And, I'm not saying that even if you tell the truth, you won't be audited, but I'm just trying to explain there's many ways the government can find out where your income's coming from and where this problem is. So I just want to make sure our listeners are knowing what these opportunities are.
So be truthful, or as Terrence say, thou shalt not lie or thou shalt not steal. All right, what else do married couples do?
Income sources. They should both need to know the CPA or whoever is preparing a tax return. Yeah. And I think I would be very skeptical about someone who is a tax preparer and who is not a CPA. We didn't get to what's a bookkeeper then?
Sure. A bookkeeper is just someone who knows accounting. They may be pretty good in keeping track of the numbers, but they may not know where everything should go. And that's the big concern because, see, tax laws have been changing quite a bit.
Ed, let me see if I can get to the bottom line. A bookkeeper can do the addition and subtraction and let you know, read your profit statement, your balance sheet, and say, here are your numbers. An accountant said, here what the tax deal is. Because let me tell you two things in America that you got to be aware of. You're going to die and you're going to pay taxes. Am I right about it?
You're absolutely right about it.
And so a accountant's job is to deal with your taxes, try and keep your taxes low best they can, but give you the best counsel.
No, the CPA.
I mean, CPA.
CPA, that's what a CPA does. the accountant, you could have somebody who doesn't have a CPA they're doing taxes, but I would encourage people to make sure they're getting somebody who has some type of certification, whether it be EA, CPA, uh, those types of things. Basically means they are willing to work harder to make sure they know more information to protect you and give you different opportunities.
Okay.
And that's really what we're really talking about, is that saving money on taxes is all about opportunities.
All about opportunity. Okay, so first thing would be trust for y'all should work together and go to the accountant
You
together.
should both
Yeah.
know about the work with the accountant or the CPA.
All right.
Okay.
And what else?
I said, know that the government has ways of finding out where your monies are. So, but
Yeah.
we're assuming that everybody on this call are honest anyway.
They all honest.
They're not
On our call,
trying to skirt their tax
they not trying
liability.
to. They
No.
ain't trying to get
No.
cousin Bobby to
No.
hide a little money over in the.
No. And that the advantage of having a CPA is that they're on top of the laws.
They
too.
know the
And
laws,
you look
Yeah.
at how
and the
the
laws
legal-
change every year.
Yes.
Like 1 year, you can only put in your Roth $7,000. Another year, you
Right.
can put $7,500.
Well, it's gradually going
Right.
up now,
All right.
and then it's
Yep.
the catch-up penalty after age 50. You know, there are
Yep.
a lot of details. So that is why because if that is not what you do for a living, that's why you
Right.
have to draw around you people who are experts in certain areas. And I have to point the finger at this man right here, him. So when we got married,
Oh, here
Yeah.
we go.
I
Here-
just
Oh,
gotta
Lord.
share this one. When we got married, maybe was it 50 years ago now? I forget. And the first year that we did taxes together, and I come out of a background where my parents were entrepreneurs, the grocery store, the laundromat, all this kind of stuff, and the taxes and the prep and the bookkeeping, the CPA. And so I've organized my little tax stuff, and I've got the categories straight, and I'm waiting for my hubby to come and to bring me his list and the receipts. You know what he comes with?
I didn't bring it to you. We went to the CPA, and she got her little things all fine. And here, this how much this
So
category.
I had to train him.
All the little
He
categories.
came with a bag.
Oh.
He came with a paper bag
Of
of receipts. What is that? Oh my God. But you know what? God's grace.
God's grace.
I did not pass out.
She just about.
No.
She clutched the pearls.
I clutched the pearls. I was like,
All right, real quick. We only got 5 more minutes. Anything closing thoughts, Ed, that people should know, and then where should they reach you and get all your information and be connected to you? Please again.
Turn says
Well-
in a client is a marriage.
Right? Yeah.
Good. What I would tell them, that you're always in a building process to have a great life. I encourage people to basically, your financial engine is your job or your income opportunity. It builds and helps you to move forward in life so you can create great opportunities. Saving 10 or more percent a year or month helps you to move forward in life and can be the great engine that fires your investments up. The big thing that I encourage people is to always keep building your ability or your sources of income. You can you can increase how you can earn. You can also increase your investments. You can build all these opportunities, but the most important opportunity is getting started and moving forward with all the different opportunities that you have, or at least try to build on what those opportunities are.
That's fantastic. Where can they reach you, Ed?
They can reach me at moneyful.com, or my email address is edf@moneyful.com. or those are really the best ways to reach
And we're
me.
going to hear the show.
They can hear the show at masteringyourmoney.com. They can, if they're in Durham, they can hear it at 90.7 FM WNCU. And there's several other stations that they can hear it on, but it's pretty easy to hear it off of the internet
Fantastic.
anytime.
Well, you tell Genevia we said thank you for letting us steal you this evening, and thank you for taking time out of your busy time of the year to come and join.
Thank you.
Thank
you, Willie. You know, they
go ahead.
Me,
Go ahead. No, go ahead.
No, I was going to say, I'm just paying you back for all the times that you were willing and available to talk to my listeners.
All right. And Terrence said, are you on IG? And the answer is yes, you are on IG or Instagram.
Yeah, I'm on IG.
All right.
We just got to get all the technical difficulties worked out.
There you go. So Terrence, he said this is a fire. We got so many people saying this
And
is
LinkedIn,
excellent.
what is it? Ed, you're on LinkedIn?
Yes, I'm on LinkedIn.
All right. Thank you,
Ed
Ed.
Fulbright on LinkedIn. And it's ed.fulbright on Instagram too.
Okay, Ed.Fulbright on Instagram, on IG. Y'all follow him and support his business. He'll bless you. We are over. Our time is up. This has been a great show
So
tonight.
informative. I love it.
Thank you, Ed.
Great.
Fulbright. We are
You're
awesome.
welcome. Thank you.
Awesome. We're going out with our
Thank you
music
so
from my
much.
jazz album, Ed. If you haven't heard this, is Close to You.
Why do birds suddenly appear every time you are near? Just like me, they long to be close to you.